I'm Tammy Vo, and I'm here with Tarek Morshed and Brad Baker of the Morshed Group at Sotheby's in Austin, Texas. The Morshed Group specializes in representing entrepreneurs, founders, C-suite, and high net worth clients in their residential and commercial real estate needs. Today, we'll discuss what happened in Q4 of 2023 in the Austin market, what to expect, looking ahead, and what it all means to you, whether you're a buyer or a seller. Tarek and Brad, welcome. We're looking forward to hearing what the Morshed Group has to say today.
Tammy, thank you. As always, we love to share what we're seeing based on the powerful and unique market analytics we advise our clients with at the Morshed Group around the real estate market and in ever vibrant Austin, Texas.
So Tarek, what happened in the fourth quarter of this year in the market?
So Tammy, there are three main things to note for Q4 of 2023. Number one, the market really found its bottom after prices dropping since the middle of 2022. We actually ended the year at about 7 to 8% depreciation in pricing. And for 4 months leading into January 2024, the market hasn't experienced any further depreciation, which is great. And it's great to see the market hitting this point as we had forecasted in our Q2 market update. Number two, the supply of housing actually moved down from 4 months in Q3 to 3 months at the end of Q4, although we did see an uptick in supply on the higher end. This was further proof of the market had really had hit its bottom. And at 3 months supply, we're actually in a real estate market environment that's really undersupplied. For context, a 6 month supply, which would be about 18,000 homes available, is an equilibrium market between buyer and seller demand, and we normally see 4 to 6% appreciation in prices annually at that point. At 3 months, there's only 8,000 homes, so we're really well below equilibrium, and most people don't realize that that's what actually happened. And then the final thing is the interest rates dropping in December really created a pop in the market. That was part of that aforementioned supply of housing moving down from 11,000 homes to 8,000 homes. And that's a real big impact from the rate drop. And combining that with our job market adding over 30,000 jobs, a very low unemployment rate of 3.5%, we've seen a real uptick in activity that's being sustained through the beginning of Q1 in 2024. And just to give us a few examples here, right? This unique new construction home featured in our last update in Deep Eddy, Terrytown, which is a really neat area, minutes to downtown. It was listed at $3 million, which is well below market at $875 a foot. And even at a price dropped at $2.7 million, it's been slow going as the higher end is taking a little more time to get going. However, this other Circle C listing we had, which is a master planned community about 20 minutes southwest of downtown, where we took over the listing, the seller made some updates. We listed at $700,000 and it sold within about a week, pretty quickly.
Hey Brad, so let's move to you. What's happened so far in Q1?
In Q1, activity definitely picked up across the markets, further solidifying our position that the market found its bottom in Q4 of this past year. January saw a real uptick in buyer activity and showings and actual pending contracts, up 5% across the market. It simply was a much busier January than typical, and buyer psychology clearly shifted from let's wait and see what happens in the market to, okay, the market isn't getting much worse and it's time for me to do something. We are seeing a market-wide acceptance of higher interest rate environment, and it's the new norm.
And how do things look ahead?
We feel we're one rate drop away from the market really moving into momentum, and the market moving down further materially is highly unlikely. The market is primed for appreciation in 2024 with supply at 3 months, builder inventory also now being below 6 months, local employment projections at 35,000 plus jobs for 2024, 40 to 50,000 folks projected to move to Austin next year, along with an amazing article that came out of NAR that's projecting Austin as being the #1 pent-up demand city in the country. We're thinking by June or so, the one rate drop happens, and we end up seeing 4 to 6% appreciation on the back half of this year.
So Tarek, what does this all mean for sellers? What should they be doing or thinking in the current environment?
For sellers, it's really the ideal time to go on the market would actually be after June at this point of this year. However, if as a seller you're also looking to move up after selling, I would actually say sell now so you can buy before prices appreciate, considering it's highly likely the purchase price of your next place is going to be higher than the place you're selling.
Brad, what about buyers? Should they be buying now or waiting until later of 2024?
For buyers, while you're past the best timing for value and negotiability, it's still definitely better to buy now versus later in June. Prices likely don't increase till June or later, but negotiability will steadily decrease and competition will move up. So get going now.
Gentlemen, this has been wonderful information. And we really appreciate all this education. Thank you so much.
You're most welcome, Tammy, and to all that are watching this. It's just really always a pleasure and fun for us to provide insights with our analytical approach about the market. And, I would say please go to the morshedgroup.com for past market updates and much more information that we post monthly.